Hello and welcome. Can Dubai recover its glitzy financial image while it's still so heavily in debt? A dramatic last-minute $10 billion infusion from Abu Dhabi has temporarily stopped further economic turmoil in the fast-paced emirate, but has also triggered more questions as to what lies ahead. The government-owned conglomerate Dubai World shocked investors a few weeks ago with the announcement that its flagship property firm, Nakheel, could not meet Monday's repayment deadline on a $4.1 billion debt. Company officials requested a 6-month standstill on the Sukuk, or Islamic bond, the world's largest. But the move sent Dubai's stock market on a rollercoaster ride and shook global markets. Even more disturbing for many people was the Dubai government's refusal to stand behind the debt. But neighbouring Abu Dhabi, which controls the presidency of the United Arab Emirates, apparently decided that one of Dubai's most important companies was too big to fail. Today we ask, how can Dubai restructure itself to prevent another financial crisis in the months ahead? Remember, you can join our conversation with your questions and comments. You can send an SMS or email, and we also welcome your phone calls onto the show. Joining me to discuss these issues are Tariq Youssef, founding dean of the Dubai School of Government. Dr. Youssef is also a senior fellow at Harvard University's Kennedy School of Government, as well as the Brookings Institution. He joins us from Dubai. From Cambridge in the UK, we have Jim Crane, a long-time journalist for the Associated Press in the Gulf region and author of the newly published book, City of Gold, Dubai and the Dream of Capitalism. Also with us is Howard Wilden, senior strategist at BGC Partners in London, a global broker that provides services to wholesale financial markets. Gentlemen, I welcome all of you. And Jim Crane, I'm going to start with you there in London, sir, and ask what happens next week, next Monday, when the key lenders holding Dubai World's debt have to decide whether or not to agree on the standstill on the overall debt of $26 billion.
Well, that's all happening behind closed doors. I think that they'll probably have to agree to some sort of conciliatory terms with Dubai. I think that they've seen that Dubai was able to get $10 billion, and that some officials there in Dubai have made it clear that not every single one of Dubai's debts is going to be bailed out by Abu Dhabi, and there'll have to be some sharing of the pain going around, but that all remains to be seen.
But Jim, one of the questions a lot of people were asking was if this company, or Dubai World, was basically a part of the government of Dubai's sort of holdings, why wasn't the government more actively involved in the bailout?
Well, I think that Dubai wanted to share a bit of the risk with some of the bankers that took on this debt. That's my feeling. I mean, they haven't really spoken too in depth about it, but these were risky projects that these lenders should have known that they were getting into. Dubai's never, none of the loan documents state in there that Dubai is going to assume this as a sovereign debt. That was an assumption that some of the ratings agencies made, and some of their literature said that, but the Dubai government never actually said that. So I think that Dubai feels that these, banks, have good research services, and they should have been informed about the risky nature of these projects, and that they should, when they loan money to an entity like this, they should take some of the risk on themselves. Right.
Howard Wilden, one of the decisions those lenders have to make now is either to insist on the debt being repaid or to be able to give Dubai more time. When it comes to insisting on the debt being repaid, if that's the decision, does Dubai, or is there the capacity for the debt to be paid? I mean, essentially the assets are going to be worth far less. The situation doesn't leave the lenders in a very strong position to insist on repayment, does it?
Yes, I agree with the sentiment, but I don't think it will come to that. This is all part of a big learning curve. Now, until a bubble bursts, which is clearly what we're seeing in front of us, no country, no company, no entity realizes the value of actual risk. And that is what has hit the area. Now, add to that, of course, that because of the naivety, the lack of understanding, perhaps the lack of transparency, we have a situation here where nobody actually quite understands the depth and nature of and extent of the problem. Well, they do now. I do now that they didn't a few weeks ago. So this learning curve, I think, transpires around everybody grouping together and coming together and deciding that, just in the same way that Western nations have bailed out their banks. They come together with one single purpose, and that is to make the thing work.
That leads me actually, Howard, to ask you to answer a question that, to comment on something that a viewer wrote in onto our Facebook page. Riaz Rafiq wrote in saying, bankers said the last-minute cash injection signalled a national approach to tackling Dubai's problems rather than leaving the struggling emirate to fend for itself. Now, from what you've seen, what signal is being sent out that there's some kind of unity in trying to deal with this problem as a federation, as the UAE as a whole, rather than just leaving Dubai to flounder?
Oh, no, I totally agree with that. I think, I mean, I am not surprised, I mean, perhaps a number of people have been surprised around the world that Abu Dhabi did come in the single-handed way it has to actually bail out the situation, but not necessarily to have done it immediately. I mean, it has allowed a bit of sweating to go on here. It has allowed nerves to be jangled. But I don't think Abu Dhabi itself, let alone anybody in Dubai, realised the consequences and how quickly this could. It was almost, in a sense, creating its own contagion in the rest of the world. But now we have a situation where I think we have one lead in this, and that is Abu Dhabi. I think the others will regroup around them. And indeed, if it was necessary, and I don't think it is, I think other Gulf states would also come into the equation if that was deemed necessary. You know, we're talking of a financial centre here. We're talking of a potential global centre, and one that in the future will be a very large force to be reckoned with. It's going through that learning curve. It's got to go through a damage limitation exercise from now on. But I think we're steering in the right direction.
Well, Tariq Yusuf, in Dubai, how much damage could there be? I mean, there's still some more to come. There's still a bit more sweating to be done with a fair amount of debt outstanding. What's being said there on the ground in Dubai and among the power circles about how things might pan out in the coming months?
I think there's still a bit of anxiety in Dubai and the UAE about the future of the next 6 months, and especially what happens after 6 months from now. There was quite a bit of euphoria in the last 24 hours following the announcement of Abu Dhabi's injection of funds and the introduction of what looks like a reasonably transparent framework for bankruptcy and restructuring that was specifically introduced to help and aid Dubai World. So market sentiment has dramatically changed in the last 24 hours on account of this announcement. But given what happened in the last few weeks, much remains to be seen in the next few months, and questions are being asked today as to what lies ahead. I think it is correct to perceive the action being taken yesterday as one where the UAE as a country is taking matters in its own hand. It's wrestling back initiative from international media and international investors, and it's trying to gain the upper hand in setting the tone for moving forward.
Let me put this to you, Dr. Yusuf. It's coming from our Facebook page, where Abu Jamal Abdul in California in the USA wrote in saying, Dubai was a man-made gold city to serve as a model for the so-called New Middle East. The only solution for Dubai is to get rescued by its neighboring Gulf countries and then be financially owned and monitored by them. To what degree is this situation, is this having to be bailed out, going to manacle Dubai and perhaps curb its ability to be able to move forward with the kind of vision that, well, certainly the leadership Sheikh Mohammed had?
I think when the dust settles, Dubai will emerge and remain the preferred hub for much of the business that flows through this region. And by this region, I don't just mean the Arab world or the Gulf or the larger Middle East, but the frontiers of Asia. These are some of the important fundamentals that will serve Dubai in the long term. Some of the reputational cost issues at present, some of the image problems that may have been damaged on account of recent actions will have an effect. But if the fundamentals are there, and there is almost a consensus, I would say, amongst observers, especially in the region, that Dubai will retain its premier place as the hub for much of the important, not just local and regional business, but international business. I think moving forward, Dubai will be able to survive on account of this and regain much of the lost ground in the last couple of weeks.
Jim Crane, how do you regard the way the leadership of Dubai has handled the crisis? There was a lot of feelings that perhaps there could have been a more strategic approach to the way the media has certainly taken over this story.
Well, that's right. I mean, I think that that the leadership must have learned a lesson here. It does look pretty bad, you know, especially from outside Dubai, when you've got the leader, you know, Sheikh Mohammed bin Rashid, assuring investors and assuring the world all along that this debt was going to be paid on time, that this 3.5 billion sukuk was seen by the entire investment community that's got any stake in Dubai as the litmus test, and then you know, right on the eve of an extended holiday, you say that you know that you can't pay it back, by the way, and then you know the phones are switched off and there's no comment for a number of days. So, you know, that's not really probably the best way to go about handling something like this. And without transparency and without the the full access to information or Dubai's financial situation, everyone assumed the worst, and this thing really blew up into a big crisis. So, you know, I think going forward, Dubai is going to have to operate a little bit more openly, and that seems to be a message that's gotten through, thankfully.
Well, a question that came in I want to put to Howard Weldon in London. This came in from Alex in Canada in our live station chat room, which is going out live as we go out live. And it says, if the real estate market declines, what else is Dubai going to rely on to get the economy going?
Well, I mean, that's a very interesting question. I perhaps should be able to turn around to you and say tourism, but tourism is not the be-all and end-all, and Dubai can't just be a trading centre as well. I mean, I mean, I come back to, I suppose, the central theme here, a belief that Dubai can and will get through this, but I think it has to, and we will go back to the status quo in the sense that it will be a large financial and indeed a real estate centre, but it's got a lot of convincing to do around the rest of the world. It can do it internally, I think, quite easily. We can get through that, but what they can't do is take for granted that Western or indeed Far Eastern markets will have the same level of confidence in Dubai as they had before. Eventually they will, but they will take a lot of convincing, and the issues of transparency must be addressed.
Gentlemen, I'm going to ask you to stand by. We have more questions, but we have to take a short break now. We'll have more of our discussion in a moment.